Welcome everybody. Sean and I will keep this kind of short and sweet for the first Monday of March. And so really we kind of want to talk about, we've been talking about interest rates and inflation and how that impacts the markets. And last monthly market, Sean kind of went through how a graph and data on how inflation really impacts investors and impacts the markets. And so this month, we kind of just want to talk about what's happening, what are we keeping our eye on. It's a hot week in the markets, especially with the jobs report on Friday, and then comments from Jerome Powell. So Sean, talk to us how the markets are moving and what's important about what Jerome Powell says at Capitol Hill this week.
Yeah, so it is a lot of the same, right? So the one thing that continues to drive markets right now, the same thing that was driving markets in 2022, and that is the relationship between inflation and interest rates. And kind of a tertiary part of that is also the jobs report. And so on Friday, we're gonna get our next jobs report number. The trend with jobs reports numbers is they continue to be extremely low. We continue to have really, really low unemployment, I should say. So we continue to add more jobs than we're expecting. We see unemployment remaining low and actually decreasing. And that's where a lot of the confusion comes in, because we're starting to see the consumer price index, CPI number, which will come out next week. We start to see those numbers have decreased from a high of June of 2022, and it's steadily decreased. So that is a sign that inflation is coming down. And so we see the Federal Reserve continue to raise interest rates, which is leading to that inflation falling. But the Fed feels like they have not inflicted enough pain as we continue to get low unemployment numbers. So we're actually hoping, and this is what's so awful to say and really hard to express, is our government actually wants the unemployment to go up a little bit, right? The market wants to see unemployment go up a little bit, because that means that interest rates can start to come down in the future, because the Fed does not have to continue to raise them. The Fed's trying to raise them to stop consumers from spending, but if everyone has jobs and everyone's healthily employed and getting salary increases, then they're going to continue to spend money, which will lead to inflation, right? So that's kind of what's been happening really throughout 2022 and the start of 2023, right? We continue to say that those are the things that we're monitoring. And what I'll do is I'll kind of show you a graph here of what we're looking at overall. So what we're seeing here on the screen is we've got the S&P 500, our index that we use, in kind of that royal blue. You can see the S&P for the year is up about 5.8%, right? So up around 5.5% through today's close. So the market has come back really in 2023, right? If we were to take a 5% return every 2 months, we would take that every day of the week. And so we're starting to see markets trend in the right direction, and that's because that consumer price index come down. But you can start to see, hey, we had a really good data really through that beginning of February. This is the time the last jobs report came out. So we saw the markets decrease really throughout the month of February once that jobs report came out, because it went from 3.8 all the way down to 3.4% in February. So when we get the number this Friday, do we see that number increase? That's going to be the big question and the thing that we're watching most closely this week. And then next week, do we continue to see the consumer price index fall? Around the middle of February, when the last consumer price index came out, it went from 6.5, it only dropped to 6.4. So the market didn't really like that. It wanted a little bit bigger of a drop. So next week, when we get the consumer price index, does it fall below 6.4, down to 6, maybe into the 5s? That would make the market really excited. Do we see unemployment this Friday tick up? Those would be some things that we're monitoring throughout the year. Some other things that we want to point out, the black one here, that is our NASDAQ index, right? So that has done the best here in 2023. However, know that did the worst by far in 2022. And that's because those NASDAQ companies, a lot of those high growth companies, they borrow a lot of money so that they continue to grow, so they do more research and development, hire more people. And if you look at the news cycle, we're seeing those companies are actually laying people off, right? So their stock is going up because people are saying, hey, they're taking action. So we see the NASDAQ has been the best performer for the year. International here at purple has also done really well. And some of the kind of the thoughts behind that are our dollar got really, really strong as interest rates rise. Now, as we start to see interest rates fall or expect them to fall, they haven't yet, do we start to see international do well because our dollar gets weaker? So our dollar got really strong throughout 2022 as we aggressively raised interest rates. as we anticipate interest falling back, do we start to see international do better? Okay. The light blue here, that's the bond market. Again, we've kind of hit it on over and over, but 2022 was really the worst year for the aggregate bond market index. We're starting to see it level out a little bit. Really hasn't come back just yet. And then kind of the pink is that emerging markets. That's your China's, your India's, your South American-based companies. Going to have a little bit more volatility in there. Again, we think that will be more closely related to how does the dollar do. And so if interest rates do fall, we expect the dollar to get weaker. If the dollar gets weaker, international do really well. As we come out of some of this downturn, we might see the NASDAQ and some of those higher growth companies do really well. But generally, the thing I want you to take away from this is in the year of 2023, so far, a lot of volatility, a lot of noise. Things have continued to trend in the right directions really since about October of 2022, and the markets have been positive since then, right? So really kind of good news for the economy. Interested to see what happens this Friday and then next week with the consumer price index. So those are the two big things that we're watching this month. Again, kind of more of the same, right? Sometimes we feel like you just put us on replay, but that's what's impacted the markets the most in 2022 and what we're watching here going into 2023. So that's kind of an update on how things are going so far.
Yeah, I appreciate it, Sean. Thanks for the comments. And so that's kind of what we want to talk about this month. For clients that are watching this, I know that kind of join on this webinar, and then for Facebook Live, all of our clients, you know what you're invested in. We kind of hone on it, if not every quarter when we meet, at least annually, so you know exactly where you're invested. If you have questions and you're watching this, you're like, man, Sean, QQQ, you know, the VOO, small value, like I don't even know what I'm invested in. We're happy to kind of take a look at that and show you just some transparency on what you're invested in, so you can kind of analyze, you know, is this right for me? You know, am I in the right trajectory performance-wise and things like that? We're happy to do that for you. Any other questions, especially as some information comes out this week? If you have questions, please reach out to Sean and I. If not, enjoy some longer days coming here as we fall forward a little bit. And if you have questions, reach out. If not, we'll see you in April.
Thanks, everyone.